Hello, welcome back, guys. So, during the recent market slump, Alibaba has been hurt as well. I mean, most companies, especially tech, has been pretty much destroyed, and this is no exception with Alibaba. If you take a look at the 6 month chart, it's been very choppy, but overall, lately it has been kinda going down, and it's down about 50% actually from its 1 year high. Now, we're going to be examining some things about the company, and frankly, I do think that the company actually has less risk than what it used to have like 6 months ago. Yet the stock price is still rather low, and it's actually a bit lower than my cost basis as well. My cost basis is about 94, 95 bucks, but the stock price has still been dropping. And again, part of it has a lot to do with the latest inflation report, and of course, what has been happening with the lockdowns in China. Yet, as we have examined, this company is amazing in terms of what they're doing financially and with their pretty much business. But it has been hurt recently for because of the crackdowns and the lockdowns in China, as well as the overall negative market sentiment, and also the overall economy is pretty much going down. Now, I kind of wanted to, of course, we're going to be taking a look at some very interesting pieces of information, some articles, but I first wanted to take a little bit of a look at the institutional holders, which is a brand new module here in our tool, and I think it's very useful to see, because this actually reports the stock, the institutional holders pretty much, and how much they own of its company. And this is during their pretty much the 13F filings, in which they have to mention what kind of changes they have done in their stock, since they are trading a lot of stocks. And you will see here that there have been quite some buying from well-known entities, and of course you will see some selling as well, but it tends to mostly be in lower quantities. Overall, I would tend to much more appreciate the top 10, because they are buying a lot or the top 20 maybe. And if you take a look at the top 20 here, you will see that it's mostly buying. And of course, I'm going to be creating some widgets that are going to be representing everything here in a little bit more optical visual manner. But you can very easily see that Goldman Sachs, for example, they have increased their weight in their portfolio. For instance, it's currently 0.65% of Alibaba in their portfolio. They increased it by 25%, and you will see that they actually bought 11% extra shares than what they used to have. This is 2.63 million, and now they're having 25 million over here. Their market value has been increasing as well since the last quarter. That is, this is all compared to the previous quarter, pretty much, as you will see here in the helpful tooltips. And prime cap management, HSBC, for instance, very interesting to see, and Morgan Stanley as well. Now, the other interesting one is actually T. Rowe Price, which frankly, I don't know why they reduced Alibaba, but this is something to pay some attention to for sure, because T. Rowe Price is a pretty big one, and you are looking at them actually increasing by 25% over here, the amount of shares that they are holding. I don't know, maybe they wanted to buy some better opportunities or something of that sort. Still, their market value is less than what it used to be, in terms of Alibaba, that is, of course. Okay, so now that we took a look at the institutional holders, I kind of want to jump to some interesting news here. Now, this is just a small piece of information, some not very interesting news, but I wanted to share because the company's second annual program is committing a total of almost $1 million here to support American small and medium-sized companies, which you may be thinking, yeah, this is not super important, and it's not really, but it kind of has to show something about China and the US. It's sort of like talks about maybe alleviating some pressure here, and being in better spirits here in terms of the US. And I kind of wanted to mention it here. Not a big thing, but of course, amidst all these issues between China and the US, it's nice to see these kinds of investments here from Alibaba. Okay, now let's go to some more interesting things here. While Alibaba, for instance, and Mercado Libre limited their plans Tuesday, and this article was actually talking a lot about what has happened here with the overall stock market and the inflation this year. And as you'll see, there is inflationary pressures, and pretty much it's talking about what is going on right now with the overall economy. You'll see that the US Bureau of Labor Statistics released its monthly summary of inflation information. The data has told us a story of persistent high prices. We saw actually an increase in the consumer price index, about 0.1 sequentially, pretty much, as you'll see. And so it looks like inflation still is stubborn. And based on what the US is doing, and pretty much their politics pretty much and their policies, it looks like we may still be having some inflation around for a while at least. Like we heard about the student debt, for instance, and this is also very, very concerning for inflation. And if more money, flies to people from helicopter money, I should say, then we're in for even some more inflation here. So things are looking a little bit weird here. Tight job market as well can actually affect inflation on the upside too. So yeah, we'll see what's going to be happening. But yeah, this article I thought it was kind of interesting, just getting a fair idea of what has been happening with Alibaba and all of the other companies that have been going down pretty much. But another interesting one, the market absurdity against market sanity, is what the author is claiming here, and I do agree with that. And we will see here that the article is actually arguing that this is textbook example of market absurdity. And after I have talked about it in the past, there is fear pretty much dominating Alibaba right now, and JD.com, as you will see here. And the investment thesis pretty much about this one and what this article is claiming is that pretty much risks are more or less priced in already. And we do know some things about the profitability of Alibaba, and we have talked about it. It has been going down a little bit lately, but we do know that they lost a lot of money on some investments as well. So it's a little bit of a combination of the factor of China, pretty much, its crackdowns and the overall economy, and also the fact that the company has actually lost some in their investments as well. So it's a little bit of a bad period of time, but overall the company is doing rather well. Now, we did examine the institutions, and you saw that they are actually buying a lot. And you will see that here, for instance, mentioning that Munger is not the only one who has been buying Baba lately. And there are also super investors, for instance, here, that you will see them buying a lot. And of course, you can find all this information around, and also our tool has a lot of institutions pretty much around buying and selling stuff, and you can see all these finer details. But the article, as you'll see, has a nice breakdown as well over here in terms of what these big investors have been buying. A lot of these purchases, of course, are much, much less than what a big institution would buy. For instance, Charles Schwab, for example, or T. Rowe Price or Goldman Sachs. But a lot of people are actually paying attention to what these great investors are buying, and for good reason. They have really vested themselves in the stock market, and they potentially know what they are doing, at least most of them, or a lot of them. And so you will see here that a lot of managers have been, or a lot of super investors, I should say, have been adding some Alibaba here. 3 of them maintained their exposure, 1 of them initiated a new position, and 5 of them increased their exposure here. And only 3 of them reduced their position during the most recent 13F disclosure. And you cannot be too confident about these guys buying stuff. Of course, I mean, you should not just blindly follow super investors. Sometimes they have their reasons, and sometimes they make mistakes as well. I mean, nobody really knows what's going to be happening in the future for sure. But the thing that I do pay attention to is the fact that Charlie Munger, for instance, got quite some, and not because it's Charlie Munger, but because I think if he bought, he has a good reason to accept the numbers of Alibaba. That's what worries me more about Alibaba. I should say I want to make sure that their numbers are fair, are actually correct, and there's no issue with those. And if these are fine, and I think that Charlie Munger would arguably be buying a company that has correct numbers, then I think that this is a very, very good opportunity and a very, very good investment, frankly. Now, Baba's profitability decreased. We talked about this one. This is mentioning the return on capital employed. I have made a full video about this one. You can't really be relying on these kinds of metrics when your net income is going down, because there are reasons, and we have talked about the reasons. And this can really, really affect your returns over here and point to a story that may not be the actual story of the company. And you kind of have to be super, super careful about this return on capital employed, or return on on equity is another one that can be deeply messed with. There are some reasons that you can actually offload debt, for example, as a long-term, liability, and affect all these metrics, or you can, for instance, get some extra debt and affect return on equity. There are things that you can do to actually mess with this. So don't be too keen on just accepting these at face value. There are more things going on with these kinds of metrics here. Just don't just take them for granted on what they are. Now, Baba's profitability is still competitive, and I think it's going to be getting better, is what the article is actually claiming here, frankly. They say that it is competitive still. Capital allocation flexibility and growth rate also Looks like the article is claiming that the company is doing very well on this one and not spending too much money here. And yeah, I thought this was an interesting article, and it does have some interesting things here. But you, again, don't be too, too inclined to just accept these kinds of return on capital employed or return on equity. It's useful; they're useful metrics, but I wouldn't rely on those. It's much better to understand what's happening with the company at the current financial situation, because the current economy and what's happening with politics and the economies of the world matter a lot as well. So bear this in mind, and make your decisions about potentially buying into China or some companies of that sort. Now, can Alibaba and Baidu finally rally with delisting fears done, is what another article is actually asking here. And I kind of wanted to mention this one because it has like some interesting things here, like a little backstory. For the past decade, U.S. securities regulators have asked for access to various financial and other data for Chinese companies. However, Beijing blocked this access, saying it was because of national security concerns. And we do know that this thing is about to change, because we will be having some U.S. inspectors inspecting Alibaba, for example. I think Alibaba is going to be one of the first ones that are going to be inspected. So we're really waiting for this one. And analysts have a moderate buy, as you'll see here, on the stock, with a price target of 166, which is an upside of almost 75%, which I think is very fair for what the company is, and I actually think this is even cheap, frankly. But we will see what is going to be happening if the company actually reaches that value at some point, and what the actual metrics will be when that happens, because the company is still operating, and they will be doing many more things in the future in terms of their financials and their operations, of course. Now, of course, the shares are down, but again, it's interesting to see that we have analysts thinking that this has a future of potentially going high, and I do agree with this one as well. That's what I wanted to talk about in terms of this article, kind of give you an idea of what is going on right now with Alibaba, kind of break down on what is happening with the world right now and what is happening in regards to Alibaba. And I hope you enjoyed this little summary of what we are seeing right now with China, Alibaba, the world, inflation and everything. And hopefully that helps you make decisions about whether to potentially add some to a portfolio, maybe get rid of it if you don't really like it. There is some risk here, but I think there is a huge reward, huge upside, which I think will happen sooner or later. I have talked about it many times. We'll see, of course. But thank you for watching, and thank you for being around. Remember to leave a like and subscribe if you're not a subscriber, of course. And I'll see you in the next one. Bye-bye.